What do we have to look forward to? This is the month of June, and now the summer gets a little bit noisy, as it were. But what do we have to look forward to? We're anticipating GDP growth to pick up, actually, in the second half. Most people are. What do you expect in terms of employment through the second half of the year?
I still think employment gains will slow down because we must not forget that the labor force genuinely is increasing at only about 120,000 or so a month. And we are getting, every month, we are seeing those type of jobs reports. We are getting closer to full employment, meaning at some point, the shadow unemployment number is getting smaller and smaller, so which means employment gains cannot outpace the labor force gains forever. So I think payroll gains will slow down towards 150,000 or maybe a bit less in the second half of the year. That is not a sign that the economy is weakening by itself. It's just a sign that there's not a much labor supply out there.
This was Jobs Day. It also happened to be Tariffs Day. We got both at the same time. As we've said, it's too early really to see any reflection of the tariff effects in the jobs numbers. But what should we be looking forward as we go through month after month? Where will it show up, if it does?
I mean, we must not forget that the numbers that we talk about right now are very small. I mean, the $34 billion in tariffs on Chinese goods, that's 0.1 something % of US GDP. So it is more than just talk, but it's still very early and mostly symbolic. It's just a sign that we are willing to do something. But that first round is small. Where we see effects is some prices of the affected goods are moving. And maybe now we talk about the tariffs on China, but we have had already the tariffs on steel and all this. Right. If you look at steel prices on steel traded in the US have gone up by more than 30%. Right. So that is textbook economics at work. U.S. consumers are paying the price of it.
But it's not only the direct effect or immediate effect, it's also CEOs and business people saying, I'm going to sit on the sidelines, I'm going to hold on to my money. We had Carlos Gutierrez on yesterday. He said, you know, as a CEO, I'd be concerned right now. And even with the FOMC yesterday in the minutes, they said, we're starting to see some hesitation in capital investment.
I mean, that's one of the areas where I agree a little bit with President Trump, that some of the companies, I think, use this as a welcome excuse to shift production abroad, which they might have done anyway. So for most companies, there are more important decisions than small tariffs, particularly if you do not believe the tariffs to stay in place. But yes, if the trade tensions, if those tensions intensify, then of course we also will eventually see some shifts in investment patterns. But I think it is still too early for that.
So at the same time, as we go forward here, there's the question of whether people will really hold back and whether it will hurt the economy. Are we seeing it anywhere in manufacturing, for example?
Right now, it's quite the opposite. US is, if you look at the sentiment indicators, which are probably the first which would show some signs of deterioration, they keep flying, right? The ISM, the PMIs, very strong. And I think it's the impact of higher oil prices, which are good for manufacturing, tax breaks and all that, which more than offset the negatives.